MBI.com. This is John's reports for the 19th of May, and well, everyone's still on potential war footing. Will it resume? Then there was the halt, so things kind of stiffened up a little bit on there. Doesn't change that you're getting your reset right now. The key is the less it drops during that reset, the stronger things get. You do have white crossing red here now on the MBI reading, and you've already had the crossover of magenta and blue. So that weakness was already built into the cards. But as we've talked about, with the full steel reset, it's just a matter of that move coming back above the negative 13, and you've got your fresh powder for longs to go ahead and buy into. You can see kind of mixed within that testing the lows. Is all we did. Nothing too spectacular, and even here in pre-market, just doing more of the same. What's your incentive at this particular point? I mean, things are pretty extreme when we look at it from a 5K standpoint. Pretty tight action within the range, but still fairly erratic. And the reality is, though, we're seeing a lot more volume. I mean, when you look at these from a 5K standpoint, this is going all the way back here. So that's just like the other, beginning of the week as well. Much more volume into the situation, and that I think is both a healthy and for some people it just scares. It just means there's rotation going on. It's that traumatic effect, but it means that people are cycling through some of the areas that have already seen big movements. It's not as attractive anymore, so you move on to the next one. I mean, that's kind of the whole point. Anyway, from an NQ standpoint, literally, well, that's the yes. Let's go for the NQ. It's not as serious from the reading standpoint, but it's literally identical. It was a little softer from the close standpoint and a little bit lower from the pre-market in this particular case, but similar with the DOC reading construct here. You do have a full DOC spread, though, on that with the breakdown here on the MBI. So, yeah, I'm not afraid of the weakness there. It's just part of what to expect. This is the problem. And as long as the oil's in these ranges, it's a looming disaster for later. Not just yet, but it will be. And it's just something people are going to have to accept. It was no different than we saw the money printing during Biden years. This is just a different way of confiscating purchasing power. So from a euro standpoint, we can already see it now. We're starting to get the reports. Volkswagen, some of these other major manufacturers starting to convert to the war footing. So they're going to be making things for their militaries now. So that's the transition to stave off the collapse that they've been experiencing. Will it be enough to bolster euro zone? We'll see. But they do plan to spend $500 billion or so. Could be enough to keep things from getting worse than they already are, because they're pretty bad. Gold really didn't do a whole lot, but it's going to stabilize in here, and as these CPI numbers come through, there's nowhere else for it to go but up. So it's kind of built into it. Bitcoin just pulling back to the recent breakout. So again, these are all relatively healthy moves from within what we've seen from a broader market behavior. So I don't have any real objection to it. It is what it is, but could we see more? Yeah, certainly down to this 72 range here would feel this positive extremes from down here, and that just adds to the strength actually of being able to move forward from there. But again, it's going to depend on whether or not the numbers look good for economy situation, and I think that's going to start to get messy because it's going to become regional. So anyway, that's long and short of it. Trade well. Anything relevant, I'll put in the team chat. Have a good one.